Amy, we talked very briefly outside about tokenized uranium. We won't go too deep on that one. I already talked to everyone earlier about it. But conceptually, how do you feel about DATs that are going maybe just purely towards commodities? Let's take Bitcoin and Ethereum out of it for a while. Can you see a world where it's, giving access to those commodities like uranium and other assets that traditionally have been very, very hard to access? Could this be a perfect vehicle for that?
Yeah, I think there's a lot that rhymes with the old era of closed-end funds from like 20, 25 years ago. So back when I started the emerging market business, we ran tons of closed-end funds. We ran a Pakistan closed-end fund, an Africa closed-end fund, a Turkey closed-end fund. And one of the reasons we ran those closed-end funds is because foreign investors could not get access easily to those markets. So what we would do is almost the exact same thing that DATs are doing. We would invest in those local assets where we had accessibility, the infrastructure to do so, and we would create the vehicle. We would raise capital one time. If it traded at a premium, we could raise more. If it was at a discount, we would buy back. This all sounds very similar to the digital asset treasury company model that we see, but there was a reason for it. And not all investors would use it, but for many investors, it was a very easy vehicle to use that. And even over time, as we got other ways to access different investment opportunities, there were still some investors, and today there still are those investors out in the market that like to trade and like to look at the arbitrage opportunity around closed-end funds. I think you could easily see that opportunity in DATs going forward. I know some of the funds already do that. They select, as you were saying, they pick their horses for long exposure, but you can also trade or take active positions around your exposure to DATs in the same way that we do that in closed-end funds. So I think they'll continue to exist. There's lots of different opportunities to leverage that vehicle. Even as you have, say, if it's tokenized uranium, you might see a DAT with commodities in there. And I think that you can have use cases for various channels of investors to access that.
Can I actually make a comment on it? Because it's really interesting, the tokenized commodities, and it's like a big thing that's popping up. We actually did a tokenized gold DAT with Antalpha and Tether. And it was great. We launched the product. But I think one of the challenges is how do you generate yield onto the underlying and eventually into the equity that is above and beyond the yield that you can get just holding the underlying, or for example an ETF or a closed-end fund. I mean, accessing uranium, there's uranium trust, there's obviously the GLD ETF. If you're doing tokenized gold and you're doing it through a DAT, in a lot of cases, you might trade at a discount because you do have public company expenses. It's a management team that has execution risk, that has salaries, that has public, the legal fees, et cetera. So if you're going to do a uranium or a gold or whatever tokenized commodity ETF, you have to be able to prove to the market that you can generate outsized yield in order to not trade at that discount, because there will be that ARB opportunity, as you mentioned.
Or to just need access in the first place. I think gold is very, very different to uranium, right? More or less, everyone can have some sort of access to gold.
Can I just, because one of the things you were talking about also is the regulation hasn't caught up in certain areas, right? So even though we have this deregulation cycle that we're going through, many fund structures of US regulated funds, European regulated funds, you probably can't hold tokens. And that's my issue, because I would, uranium is something that we would like to get exposure to. Having pure uranium, you get more direct. Some of the trusts don't trade. The correlations aren't always high there. So you're trying to get the purest exposure you can. The token looks super interesting. Some investors are even looking at creating total return swaps on the token because they can't actually use the token right now. So we do need to play a bit more catch up on some of the regulations in other areas of the market.
Encouraging in a way that old school big institutions want access to the token, the mechanics and everything that comes with that. Discouraging that they can't have access, and ironic that we have to create total return swaps or other ways to engineer people to have access. So I think it's going to be very interesting how this plays out in the next few months.